When you look at some of the conflict, and I think we need to start there, I know Prudential is very focused on Asia. It's very focused also on Africa as a smaller hub that could become bigger. But I guess the market turmoil, because of the second and third round effects, should not be underestimated in the market.
No, I mean, the events are obviously horrific, and I think they're, as your opening comments, they're starting on creating volatility and political tensions globally. To your earlier point, we don't have exposure to Europe, let alone Russia and Ukraine. That's not where we do business. We do business now exclusively in Asia and Africa. So the secondary effects you see there are market volatility, potential further acceleration of inflation, those sorts of dynamics. But we're on the other side of the world of that current crisis.
Yeah, is there anything that you worry about in terms of the markets freezing up? I mean, you lived through the 08 crisis.
Yeah, I did.
And so could we see anything similar there?
No,
actually, there's a big hedge fund position.
A lot better coordination with global, the equivalent of central bankers. There's excellent dollar liquidity, for example. If you look at the Bank of England U.S. relationship, those are strong and historic. More cooperation with Asian key central bank figures, Hong Kong MAS and things. I think that model is much more sophisticated than it was in 08. 08, it was relationship-based. I think this has now got good relationships, but also much more technical structure. So that doesn't mean you won't get volatility. Right. And I think it changes what people want to invest in, and it's a risk-off. As you see, we've been a liquid. We're seeing that sometimes as a European stock, and we get hit by volatility noise. But in spite of a growing sales 8%, new business profits 13%, and as you said, operating income plus 16%, and it's the risk-off piece, I think, is where you'll see the market go now, because that's the consumer sentiment, not just the trader sentiment.
And Mike, Prudential is now really an Asian-focused business, and actually it's really important for investors and people that watch us to realize that. What role will Africa play in this? At the moment, it's quite small. How much can it grow?
It is. So Africa's our future, right? So the key when you're a CEO of a 170-plus-year-old institution, there's a bit of a stakeholder mindset to it. Can you make it better than you found it? And there's a responsibility to position things for future leadership. So, I was when I joined Prudential. This is just showing my age. Our Asia business was less than £3 million of earnings contribution, and it was categorized as other geographically.
Yeah.
And now you see the sort of numbers that it's producing. It's one of the largest businesses in the region, and it's grown very dramatically. Africa's got the same potential, but over a longer time frame. And the teams on there.
15 years?
I don't think it's that long. I think it'll go faster. Everything about our industry is accelerating faster. Consumer preference, regulatory, capital models. Technology has made learning faster. If you're a regulator, a consumer, a competitor, so I think that it's about the political development there, but it's a young continent, and it's got tremendous upside and tremendous need for there aren't governments that have retirement savings or health protection schemes at scale, and so that's what we do.
Mike, it's very clear that when you look at what's happening with Russia and Ukraine, so of course it's always loss of life that we think about,
Absolutely.
But there's also now become an economic war between the US, the UK, certain parts of Europe, and Russia. Do you worry that we're going to see some kind of geopolitical, concerns being transferred with China? And how do you prevent something happening if geopolitically China becomes more aggressive?
Yeah, I think the lens always with China that's important is what's in their long-term best interest. They're not a short, they don't tend to react short-term if you look at their history, and certainly the history of the current leadership. So their moves, I think personally, not less than the corporate view, are always towards what's the greater benefit of China. The key for China now, you've seen they've produced lower GDP growth rate forecast, which is still in excess of 5%. And growth is going to be hard to find globally. Again, I think we're positioned in the markets that'll have it. But 5% is an excellent number for the size of their economy, but it's critical to the success of the economy. So I think that's first and foremost the lens for their government now. So, they're seeing what's happening to an isolationist, Russia now. And I don't think that's, if you're a smart political leadership and they have, very talented people, they're going to look at that and say, we don't need any of this noise. We don't need any of these challenges. They want to grow the economy, and you do that by being a part of the world economy, not separating yourselves.
Mike, you have a joint venture actually in China with CITIC.
We do.
Does it make sense taking it over completely?
So I've been public. I would have loved to have bought the whole thing. It's up 24% this year. It's grown almost 40% a year in both earnings and in its key metrics since I've been CEO. It's an incredibly successful business now, so they enjoy it too. Yeah. It has a footprint across all of Asia, all of China. It has 85% 84 or 85% of China's economy.
Yeah.
And it's got, and CITIC's been a great partner. So we'd love to have it. It's working very well as it is now, and they're a sophisticated partner in dealing with China, including the political questions you're asking. They're a great partner.